This is probably going to be my shortest video ever. I say take a closer look at what I believe are the 3 easiest stocks for me to buy during this downturn. Let's take a closer look in today's episode. If you're familiar with this channel, you know we talk about AI, semiconductor, tech, cloud, and the list goes on and on. And I focus in all types of companies. It could be big players like Google that did amazing, and we kind of bought during this era where the market thought Google was over. Now, I believe the market has given us some opportunities, or has given me some opportunities to buy 3 mega players that I think are great long-term winners in the long term of things and are easy buys. And what I mean easy buys are these are companies that I feel I can invest money in and won't have to worry about what happens tomorrow, next week, or next month, as I do believe the opportunities and the stability that they have will be fine for multiple years. So the first company is going to be Amazon. The second company is going to be Nvidia, and the third company is going to be Meta. Now, the first thing I want to show is some pretty cool charts. And this is why this episode is going to be so quick, because the amount of information you can get from charts paint an easy picture for me to tell the story. So in the past 5 years, if you invested $10,000 in Nvidia, Amazon, Meta, and the Qs, you would have the following: $136,000 on Nvidia. This is one of the main reasons I can do what I do, because of the investments of Nvidia. It has been an amazing returner in the past 5 years. Now we have Meta with around $23,000. We have QQQs coming in third place with around $21,000. And we have Amazon in last place with around $14,000. Now, I think it's wild that Amazon has underperformed the market, but I think that is going to change in the long term starting now. So for each company, I believe there's going to be a different story. And for these 3 companies, these are actually some of the cheaper stocks right now. If we look at the cheapest stocks in the Max 7, first we have Meta with a forward PE ratio of 21.49. To my surprise, number 2 is Nvidia with 25.98. Now, if you are liking all these charts are possible thanks to Physical.ai, and you can go to physical.ai/Jose to enjoy their Black Friday sale, which is 30% off all plans. I use this platform on a daily basis. You most likely see other content creators use it on a daily basis. The main reason is it is a very great product. And if someone like me is serious about long-term investing, of collecting great visuals and data, this is the platform. So check out physical.ai/Jose. Now, to me, it's not only about being the cheapest or one of the cheapest, but it's also about where you are compared to your historical levels. For example, Amazon might not be the cheapest. It's currently sitting at around 31. But if we look at historical levels, this is one that usually trades a little bit higher than that. So compared to its typical and median values, all 3 companies are way below it. And to me, that gets me pretty excited. Now, all 3 companies have great stability in forms of cash flow, in forms of balance sheet, in forms of overall market. Now, some might say, Jose, Nvidia isn't that, right? Nvidia is going to end when other companies like Google and AMD take over. That's a thesis, but that's not what's happening right now. But let's jump in with Amazon. Amazon, if there was one chart that I can show that showcases why I'm extremely bullish in the company, is first, AWS, which is the blue number, right? AWS continues to grow. And as we continue to hear, the demand for AI and for clouding continues to grow. AWS has stated that there's still so much workloads that are run on premise. Not much has really moved on to the cloud yet. So that's still multi-$100 billion more opportunities for this market. And this is one that keeps growing at rapid levels. The other is advertising, right? Advertising is another high margin area that continues to grow at strong year-over-year growth. Now, obviously, you have the strength of their e-commerce, you have the strength of their subscription, and all these other different revenue avenues that help make me feel extremely, extremely stable with a position like Amazon. This is actually one of my first times owning Amazon. This is one I personally never owned. And luckily, looking at the chart that we saw earlier, it's probably to the best. It has underperformed the Qs, but I am very hopeful that this is going to change throughout the next few years. So those are the reasons I enjoy Amazon. Now I want to showcase Meta Platforms. Meta Platforms is a company that continues to grow its advertising revenue. Many people say, Jose, Meta Platforms is using all this money for AI investments. That's necessarily the biggest false statement I've not heard, but it's a false statement. I didn't want to go overboard. But Meta Platforms, the investments that they make for AI or for these data centers and GPUs, it's for their core revenues. It's what allows them to grow at 21% year over year. To me, this is going to continue as advertisement is going to grow even more and more as more people enter into the digital world via some form of AI product, via some form of technology that maybe Meta designs. They have billions of people on their platform and they still continue to find more and more and grow and grow. So to me, Meta is one of those players that the advertising business, the cash flow that comes from there, and the amazing ROI that they're getting from their GPUs is going to continue to be a strong leader for them. Now, the final one is Nvidia. Nvidia is the giant, and it's growing at multiple double digits, right? Year over year, in the most recent quarter, it grew nearly 61%. This is the player that you're not messing with when it comes to data center technology. Obviously, you hear fear thesis, you hear a lot of bear thesis of Google TPUs, of Michael Berry shorting. And to me, this has created an opportunity to actually start to add on to Nvidia, a company that I've owned for many, many years. And usually don't really take the time to buy more into just to the position size. But the fear that is coming out from the overall market right now, even though this company gave an amazing quarter, makes Nvidia the third easiest company. Well, not the third, but in the top three companies for me to own and not lose sleep at night. So I hope you guys enjoyed this episode. Again, it's just so great to have great platforms that help you tell the story in such a simple way. And like I mentioned, if you want great pricing, make sure to check out fiscal.ai/Jose to get 30% off during this Black Friday sale. Also, check out my overall community at whatthechipHappened.com. I do daily, almost daily deep dives on a lot of AI companies, semiconductor companies, and I also do have a Black Friday and Cyber Monday sale where you get 33% off, $100 of saving using code CYBER. Check out whatthechipHappened.com.